Mariner Finance is a consumer finance company offering personal loans to a broad range of borrowers, including those with less than perfect credit. They offer loans to people in these 28 states. I will explain how their loans work and what you should look out for. But I need to clarify that many of their policies are dependent on the state in which you live. If you've used Mariner Finance before, please tell us about your experience in the comments below. And don't forget to include your state. Others could benefit from your experience. Mariner Finance offers loans that range from $1,000 to $25,000. While you can apply for one of their loans online, you will need to complete the loan in one of their branch offices if you want a loan that is below $1,500 or above $15,000. They lend for terms between 12 and 60 months. Their lowest APR is 16% and their highest APR is 36%. I believe that most of their offers will have an APR that is higher than 25%. If you are taking out a personal loan for more than a few $1,000s, that interest rate will mean paying a lot of interest over the course of the loan. That higher interest rate exists because they primarily focus on lending to people with poor or fair credit. If your credit score is above 650, it is likely that you have other options that you could pursue. If you are applying online, you will need to have a credit score that is 580 or above. If you apply in one of their branch offices, they do not have a minimum credit score requirement. Mariner Finance charges a range of different fees, and all of these fees will depend on the state in which you live. Their origination fee could be as high as 10% of the borrowed amount. In many cases, Mariner will roll the origination fee into the amount that you owe. So if they charge you a 5% origination fee on a $10,000 loan, you will receive $10,000, but you'll need to repay $10,500. They could also charge a credit investigation fee to reimburse them for the inquiry that they do with the credit bureau. This is an unusual fee, but will likely be less than $35 and could also be rolled into the amount that you owe. If you are late on a payment, they will charge up to $35. That is a high late fee compared to other lenders in this space. They do not have a grace period on their payments either, so being a late immediately incurs the fee. On top of the late amount, Mariner will charge a 13% annual interest rate on overdue amounts. It is unclear whether this is in addition to the standard interest rate, but needless to say, being late with a Mariner loan could get expensive. Mariner also sells different types of insurance. Credit life insurance pays off the remaining loan balance if the borrower passes away during the loan term. Credit disability insurance covers loan payments if the borrower becomes disabled and is unable to work. And involuntary unemployment insurance assists with loan payments if the borrower loses their job through no fault of their own. You cannot be required to buy insurance on condition of being approved for the loan. If they do require it, they must, by law, include the cost in the stated APR. I am generally pretty skeptical of loan insurance. My research suggests that the payout rate on credit insurance is much lower than other types of insurance, which tells me it is probably overpriced from the risk it's protecting you from. Mariner offers both secured and unsecured loans. About 1/3 of their loans are secured. If your credit score is particularly poor, you might need to secure the loan in order to be approved. The most common collateral for securing one of their loans is the title to your motor vehicle. There are instances where the sales associate will accept other valuables as collateral to help you qualify. Remember, if you fail to make your payments, Mariner can take possession of your collateral. If, for instance, you are 45 days late on a payment for a loan secured by your motor vehicle, they are likely to come seize your car. How you can redeem your car will depend on what Mariner is permitted to do in the state in which you live. Some states you will have to pay the loan in full to get your car back. In others, you will just need to catch up on any late payments as well as the towing fee. Another thing that can help you get approved is to add a cosigner or a co-borrower to your loan. This is especially helpful if your co-borrower has a stronger credit history than you do. But keep in mind, if you fail to repay the loan, your cosigner will be responsible for it. Also, the loan will be reported on their credit report. We have seen a few indications that Mariner is fairly aggressive if you end up struggling to repay your loan. They can sue you for repayment, especially if they believe that you have the capacity to repay. They resist working with debt settlement companies or debt management plans to lower your payment in case of hardship. Another thing to be aware of is that they might encourage you to refinance halfway through your loan term. They might reach out and ask if you want to borrow a little bit more money. Remember that if you do refinance, even if you don't take any more money, you are restarting the term on the existing debt. Refinancing can significantly drop your monthly payment, but it will mean being in debt longer and paying more interest over time. If you have poor credit, Mariner Finance might be one of your lowest cost options for a personal loan. However, borrowing from them could be more expensive than it looks if you buy their credit insurance or if you're occasionally late making your payments. We recommend that before you accept a loan from Mariner Finance, you shop around. You never know which other lenders might approve you, for what rate, or how much they'll offer you. At the Yukon Project, we've tried to make shopping around easy. If you visit our lending marketplace page, you can apply to any one of our featured lenders. Behind the scenes, we will check your rate with up to 40 other lenders. Our partners use a soft credit check, so applying won't hurt your credit. We'll show you all of your approved offers so you can pick the loan that's best for you. If you found this information helpful, please like this video and subscribe to our channel. It helps us continue to make content like this. Thanks for watching.